Hi, my name's Tom Elliott and welcome to another financial markets update for Hodges Real Estate. Well, the federal budget for 2015 was passed a couple of weeks ago. I should say it was handed down by the Treasurer Joe Hockey. And the differences between this year's budget and last year's are like chalk and cheese. Last year it was all about deficit reduction and paying down Australia's debt. This year the Treasurer was handing out the chocolates, probably in an effort to get the government re-elected next year in 2016. So, small business did particularly well out of the budget. Two things. First, there was a tax cut from 30% down to 28.5% for small businesses incorporated as companies. And by the way, a small business is classified as one with a turnover of less than $2 million. Secondly, small businesses can now get an upfront tax deduction for capital items worth up to $20,000. Now, what is interesting about this is that it is not one deduction, but as many as you want. However, you can't claim it for things that cost more than 20 grand, but you could buy, say, 4 things costing $19,000 and you will get 4 lots of $19,000 tax deduction up front. For property investors, there was good news in that both negative gearing and superannuation were left alone. There were some fears before the budget that the government might have a go at these. Pensioners were one of the few losers in this budget. The government has reduced the eligibility for the age pension based on the assets a couple or an individual have outside the family home. And the big issue, I guess, for the whole thing is, will the Senate pass it? Only time will tell. Interest rate, well, last month the Reserve Bank was very quiet on whether or not there might be further interest rate cuts in the system. The firm Australian dollar, stuck at around 78-79 US cents, suggests that the foreign exchange markets now think that the interest rate cuts that we have had, and remember official rates are down at a record low of 2%, will be all she wrote. I have a different view. I still think at least 2 more cuts are in the offing, so at some stage in the next 6 months I think the Reserve Bank will cut again such that official rates fall to 1.5%. Now, this is good news for property investors, however bad news for the economy because they'll only do it if the economy is going weak. The share market remains in a sideways trading pattern at the moment. Bank shares have been steady to slightly weak because it's not entirely clear where their future profit growth is going to come from. BHP in the last week has split itself in two and has a new entity called South 32 that BHP shareholders now own. Well, for property, the information continues to be very, very positive. Clearance rates in Melbourne are now well over 80%, some weekends 83 to 84%, especially for houses. The Reserve Bank is worried about overheating, but it feels that there's really not much it can do about it. The Andrews government has decided to reserve the right to not charge the 3% surcharge on foreign property buyers. Again, that will keep the heat in the local market. Entry-level suburbs like Caroline Springs are recording record results. One house I saw there went for $1.59 million, a record price for Caroline Springs. First home buyers are in a great deal of trouble because they are being left behind, and it seems to me that downsizing baby boomers, they're selling the big family homes, buying single level homes in established suburbs, they are the reason that price rises in those suburbs are occurring. So thank you very much for this, and of course if you're thinking about buying or selling a property, be it your primary residence or for investment purposes, don't hesitate to contact your local Hodges office. Their assistance in the process can only add value. For more information, go to hodges.com.au.